Hello, welcome to my channel, Digital Way. My name is Victor Chobzokar, your stock investment coach. So today I'm going to show us some potential companies that pay dividend, and you need to invest in these potential companies so you can be able to earn dividend from the companies. So I mentioned some few companies here, so watch this video to the end so you get to know the stocks I recommended, potential stock that pay dividend, that can pay you dividend as an investor this 2026. Huge dividend. So let's get started. If you find this video helpful after watching it, kindly share and recommend my channel to others so they can be able to benefit from the videos I post here. Thank you very much. So let's get started. So the background of what we're going to talk about today is dividend paying stocks investors should buy in 2026. But like I said earlier, these are some of the dividend paying stocks that investors needs to watch out for, needs to invest in and earn dividend in 2026. So what are those things we need to know? So dividend paying stocks to buy in 2026: build passive income, beat inflation, grow wealth. 2026 dividend strategy explained simply. So I'm going to break down this dividend strategy in a simple way that you will understand. A simple way even a 5-year-old child will understand it. So I'm going to break it down and show you guys the strategies on how you can invest in these dividend paying stocks. So why dividend stocks matter in 2026? What matters is inflation is still eating savings. Salary alone is no longer enough. Dividend stock pay you while you sleep. Perfect for long-term and conservative investors. Big idea: in 2026, cash flow equals speculation. So in 2026, inflation is still eating savings. The money you invest in the bank, the money you save in the bank, is being eaten by inflation. So inflation on daily basis eats our money. When you save money, you are leaving it in the bank for inflation to eat it. So instead of you leaving that money in your savings account, you invest it in dividend paying stocks. Then salary alone is no longer enough. Some of us earn salary of 20, 30, 50,000 and it's no longer enough. When you check your expenses and when you check all the expenses, you understand that your salary is no longer enough to solve your human need, to solve your problem. So it's then therefore you need to invest in dividend stocks. So dividend stocks pay you while you sleep. So while you invest in the dividend stock while you sleep, dividend is being paid to you while you sleep. So you don't need to work for money. The money invested in dividend stock is working for you and it's being paid to you while you sleep. So perfect for long-term and conservative investors. So this is good for long-term investors. So imagine you invest for a period of 5 years and they pay you dividend twice a year or once in a year for a period of 5 years. Imagine how much you would have earned from the dividend. So it is very, very important that when you earn money, you buy stocks and invest in dividend paying stocks. So what makes a good dividend stock? Before buying any dividend stock, check this. This is what you're going to check. Meanwhile, what is dividend? So let me now explain what dividend means. So dividend is a payment made to shareholders from a company. So a company decides to pay their shareholders from the revenue they have generated over a period of time. So if a company generates a revenue profit and they will decide to pay their shareholders, so those who are their shareholders will be paid dividend. So this is the way investors earn in the stock market. So there are two ways you earn in the stock market, which is value appreciation and dividend payment is one of them. So when you invest in the stock market, invest in companies that pay dividend, definitely you're going to receive dividend from your company. So consistent dividend payment. So before buying any dividend stock, I just explained what dividend is. So before buying any dividend stock, check this. What you need to check: number one is consistent dividend payment for a period of 5 to 10 years. So there are companies that have been consistent in paying dividend. You need to check them out. While doing your research, your fundamental research, check these companies. If they have been consistent in paying dividend for 5 to 10 years, that means they will keep paying dividend. So there are some companies that are not consistent, so you don't need to invest in those companies. Check this first: 5 to 10 years, consistent dividend payments. That's number one thing. Strong cash flow. This company should have a strong cash flow. Profitable business model. Yes, this company should have a profitable business model, something that generates income on a daily basis for the company. So that's what you need to check out for. Reasonable dividend payment ratio. So some companies doesn't pay much dividend. There's some companies that pay high rate of dividend. Some Some of them don't pay high ratio dividend. So you need to check these things to know the ones that are paying high ratio dividend, so you can invest in industry with steady demand. So the company you are investing in the sector they are they making profits on a daily basis? Are their products being demanded by the public on a daily basis? So these are what you need to check. So now we'll move down to dividend strategy for 2026. So what are the dividend strategies we need to follow in 2026? Smart investors will focus on. This is very, very important. This is very, very important. This is where you need to focus well. So investors, smart investors, not just investors, smart investors will focus on banking sectors, telecom companies, energy and utilities, consumer goods companies with pricing power. So earlier this year, I recommended some of the stocks that will do well in 2026 to my community. So these companies made research. I researched about the new tax policy. So there are companies that will benefit from the new tax policy 2026. So some of these companies I have already recommended them in my community. So I will still mention them here for you to know them. So these are the things you need to know. You need to focus on banking sectors, telecom companies, energy and utility, consumer goods companies with pricing power. So dividend stock number 1, which is the bank. Why bank pays strong dividend? Banks make money daily from lending. Yes, they make money daily. Bank doesn't wait till month end for them to earn. They borrow money to individuals, companies, and even the government. They borrow money to them. And these companies, governments, and individuals pay them on a daily basis, pay them interest on the money they borrowed from them. So once the bank borrows the money, interest is being paid by these individual governments or companies that borrow money from the bank. So as they're paying interest, the bank is earning. So the bank doesn't wait for month end for them to earn. So bank earn steady income through lending of money. So once they lend money, they earn. So that's why you need to check out the banking sector. You need to invest in the banking sector in 2026. High interest rate environment favors bank. Because of high interest rates, individuals and the companies and government that borrow money now pay high interest rate. Interest rate that should be paid 10% will now be paid 18%. So the government earn high, and this makes them strong in the banking sector. So number 1 is banking. So steady cash flow. What to look for? Consistent profit growth, history of dividend payment, strong capital base. Some companies have this history of paying dividend. Some banking sectors, they have history of paying dividend, strong capital base also. So when you check all these things, you need to consider before investing in the banking sector. So one of the banks I'm recommending is First Bank, GT Bank, and Zenith Bank. These are 3 banks I'm recommending from this video: GT Bank, First Bank, and Zenith Bank. So let's check the second one. So dividend stock. The second one is telecom companies. So why telecom is powerful? People buy data every month. We don't even wait every month to buy data. We buy data almost every day, every week. We buy data. So for me to record this video, I use data to download the information I needed for this video. I needed data to edit the video also. I needed data to post it. So we buy data and airtime every day. So as long as you're buying data, as long as you're buying airtime, these companies are earning. So recession resistant business, strong recurring revenue, investor benefits, predictable dividend, long-term growth plus income. So telecom communication is number 2 on the list. So some of the companies you need to look at when the telecom companies are MTN and Airtel. So these are 2 strong companies I'm recommending under the telecom companies. So the third one we have here, energy and utilities, which are essential services, power, energy, stable demand regardless of economy. We need power, we need fuel, we need gas on a daily basis. So these are the things we need. We need light. So there are some companies that are into this. So some of these companies are Oando, TotalEnergies, Seplat company. This company is doing well in the Nigerian stock exchange. This Seplat is doing well. So 3 companies I'm recommending: Oando, TotalEnergies, and Seplat. So these are the 3 companies that I'm recommending under energy and utilities. So they have stable demand regardless of economy, good for defensive investors, dividend advantage, reliable annual payout, lower volatility. So they have lower volatility. So you need to invest in these companies I just recommended now. So the fourth one is consumer goods companies. Yes, I love this. Why consumer goods pay dividend? People buy food and essentials daily. Strong brand loyalty, pricing power against inflation, best fit for long-term investors. Mark the word long-term investors, income stability seekers. So why consumer goods is also necessary for us to invest in 2026 is that people buy food and essentials daily. Yes, we eat every day. All those food food commodities we buy on a daily basis. There are companies that are into it that produces all these things. So as long as you are buying, as long as you are eating food on a daily basis, they are earning. So this is the reason we need to invest in consumer goods. So one of three companies I'm recommending in under consumer goods: BUA Foods, PZ Company, and Cadbro. These are the three companies I'm recommending under consumer goods: BUA Foods, PZ, and Cadbro. They are doing well. They are very good companies I'm recommending under the consumer goods company. So these are companies that will pay dividend. Note that these are companies that will pay dividend in 2026. So they have strong brand loyalty, the pricing power against inflation, best fit for long-term investors. So the next one, common dividend mistakes to avoid. These are the common mistakes you need to avoid when buying dividend-paying stocks. You need to avoid these mistakes. Chasing high dividend yield only. You don't chase high dividend yield only. You need to consider all the factors that are necessary to check when you do your fundamental research. Understand what the company does. Know if they pay dividend on consistent. So if they pay dividend consistently, that is another reason why you need to invest in them. So you don't need to focus only on dividend yield only. So ignoring company fundamentals. Yes, you don't ignore company fundamentals. Make sure you do your research. Understand what the company offers. Number one, understand their management, know what they produce, and then you check their financial record. Very, very necessary. Check their financial record for the past few years. So buying weak companies with sustainable payout. You don't buy weak companies with sustainable payout. So you need to check companies that are strong in the sector, and also make sure you don't buy weak companies. So not reinvesting dividends. Yes, most of new investors, once they see dividend, once they have paid dividend, they use the dividend to maybe sub themselves out, maybe use the dividend, maybe use it for other things. No, as long as you once you receive your dividend, make sure you reinvest your dividend. Use it to buy more stocks. So when next your dividend is coming, if you add up, your dividend will add. Instead of getting same amount you got, you will also receive higher amount since you have reinvested your dividend. So reinvesting dividend is very, very important. Don't make this mistake. Rule: dividend must come from profit, not debt. Dividend must come from profit, not debt. So as long as the company is making profit, they are going to pay you dividend. So if the company is on debt, they are not going to pay dividend. It's not going to happen. So once the company is making profit, we are sure that you will receive your dividend. So that is why it's necessary for you to check companies' financial record, so you know their revenue over the past few years, if you are making profit or not. So if the company is making profit, note that you will receive your dividend. So reinvesting dividend equals wealth hack. When you invest your dividend, you are building wealth. So there are four asset classes, which is business, real estate, commodity, and paper asset. Paper asset here is stock. So it is under stock. So for you to build wealth, you need to use all these four asset class. So one of the four asset class we are using here is paper asset, which is stock. So as long as you want to build your wealth, you're going to use the stock, and dividend paying stock also helps you to build wealth. So buy more shares automatically, compound growth over time, bigger dividend in the future, small dividend today, big income tomorrow. So have you seen it? Small dividend you receive today will compound to a bigger income tomorrow. So don't neglect small dividends you are getting from each company. So once the company is paying you dividend, no matter how small it is, no matter how small your dividend is, do not overlook it. Do not undervalue your dividend. Your dividend is very, very important, no matter how small it is. So you keep building till you get to your point that your dividend alone can even be solving almost all your problems. Yes, there will be a point in time where you'll be investing and your dividend will be used to solve almost all your problems. So note that. Alright, so here we come to the end of the video. Thank you very much for watching. So some of these companies I have listed, I will still write them down under the description below so you can be able to get them and invest in them. So thank you very much for watching this video to the end. I want you to like this video, subscribe for weekly stock insights. Don't forget, like the video and subscribe to my YouTube channel. Thank you very much for watching. Thank you.